Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is Thursday, the 24th of October, 2023, and we're looking at the British pound, getting right to it this morning. This is the daily British pound, and we're still looking at this big fair value gap below price action right now. We've got relative equal lows. We've run out the lows from a few days ago. So Thursday, so we got Wednesday, Tuesday, Monday. So Friday's low has been taken out. We're down to the rejection block. Hit it nicely, pulled back off of that this morning. And we are looking probably to retrace back. I'm just wondering whether or not this is going to stay open, and then we're going to continue down this, creating a little fair value gap here. There is a slight little price imbalance just above yesterday's open. We have this wick, 50% of that wick. So we've just reacted off 50% of that wick. So we're still looking for more downside. I'm still looking for this big fair value gap to get hit or taken. There is this price imbalance just below this low here. We've hit it a few times in the past, but no body has actually gone through it yet. We've actually had a few wicks, so I'm looking for more downside on the British pound. Euro is pretty much going to be the same thing by the looks of it, because they tend to follow in suit with one another. That's that downward fair value gap, inversion fair value gap. Now we've come back into it. It seems to be the stronger of the two pairs. There's that little trend line that we were drawing yesterday. So if we do blow through that trend line, we're going to blow all the way through into this order block here at least, or run these lows out into the bottom of this inversion fair value gap. Right now it's had a nice little reaction off of just taking out the lows here and come back into the range again. So nothing solid. We'll see where that ends up. It's on the daily, so if we close on this candle's threshold after running it out, then we could just come back into that. It's creating another smaller fair value gap in here. So this was really tight, not an easy one to call. Off the specific PD arrays has already run these lows, so now we're looking to run back into this order block above. And that would be a breaker now that we've taken that low out. We're going to come back into that on the low, and then look for the open. So anyway, there's between where it's at now, gun to my head, as Michael would put it. It feels heavy to me just because of the British pound. So we're looking for another tap of this low here before returning back up. I think today might be the day that we've got a lot of bouncing around. It's hard to call on that one. We finally went through the space we were calling for yesterday. We went up and tagged it, came back down, opened this morning, and finally drove through it. So we're looking for rejection block, which I think we've already hit. Yeah, it's already hit the rejection block. So if that's where we stop and turn around and come back down today, it's Thursday. So this is what we usually call reversal Thursdays. Not that that's carved in stone or anything, but we're looking for perhaps a pullback down into the top of the range here. That's what I was calling for yesterday. It looks like it just came short of it. We're looking for it to return to this old high here. In terms of inversion fair value gaps, what have we got over here? We got that guy right there. So look for price to come back into this fair value gap below. The price on the daily, this new daily one, which will form here once the stake closes. If it closes above, that will be a BISI. Weekly, we're still heading for that high now that we've blown through the midpoint. We did finally run out the lows today. We were calling for this for the last couple of days, so it's finally run out the lows. New Zealand dollar has not quite, it's basically come back to, hasn't tagged out the bottom of that weekly fair value gap yet. We're looking for potentially a run up into this order block here for a continuation on the downside. Now, if this runs up into here, I'd like to see that kind of stay open if we want to have a nice little strong continuation on the downside with this order block filled at the bottom. It's open there, so we'll see how that one sets up for the day. Oil had a nice little return back down into the low, retapping the lows here, and then we want to see a return back up into these equal highs, and there's small pockets of liquidity up here for this retap down here. It's a bit surprising, really. I was expecting nothing but a reaction off of here to go up higher, but we drove through it. With all the tensions over there in the Middle East, you figure price of oil will be a little higher. So I haven't got a beat on oil yet. Gas is still working well. It's still reacting off that weekly inversion fair value gap, which is what we were looking for. I wanted it to be here, but I said I'll allow it to come down to here, or even the old highs here. I really want to see this thing stay open to give us some strength, and that's exactly what it's doing now. It's kind of left that last little piece open, creating a little breakaway gap. Now I want to see it really drive up above these highs here and push into this fair value gap, SIBI on the weekly. So look for prices to continue on the upside there. As soon as we get above this high here, I'd like to see that, because we got more little imbalances that are occurring. It seems to be a pretty frequent thing where these imbalances pop up over and over and over again. S&P 500, let's look at this on the daily. Looks like it's done a nice little run up. Broke the lows. It's taken out the lows now. So it's finished driving down through all of this stuff. All this monthly, weekly, and daily fair value gaps. Drove through them all. Hit the bottoms. Now, are we driving down for this liquidity, and eventually down into here? Where would we find support? Perhaps at the top of this daily fair value gap, which is in line with the weekly fair value gap, which isn't too far from the monthly fair value gap. So we could get a drive back up into this area here for a, let me clear this out of the way. Delete. Let me get back on my channel here to make sure everything's kind of running okay. Yes, we are live. Morning. No trading for me today. At a place to get a new tire, flat. On the way to work last night. Doctor appointment tomorrow morning, 9 a.m. So don't think I'll make it then either. Be back on Monday. All right. Well, sorry to hear about the tire up, dude. It's better you get it fixed now before the big dip in winter starts to hit. So, yeah. Sorry to hear that. And the doctor, I hope that goes well for you tomorrow. Are you sticking around? So you're not trading this morning, but are you sticking around for a little price action stuff, or are you just gonna check out for the day? I have to make sure that I've got our I will put on the face or the Skype is on. Breakfast Club's on. I'm sharing my screen so you can see what I'm seeing. Look at this price action here. This little gap in price, return to that. We already hit the open of the day. So look for that area sensitivity there and the close of yesterday. Yeah, look for that running back up into here. NASDAQ still has its monthly, weekly, and daily fair value gaps it hasn't kind of eaten through yet. It's just come down to the top of the weekly fair value gap down here. The daily, it's dug inside the daily one now. So looking for a return to these equal lows here, or the top of the monthly. What is that, gray? I think that's gray. That'll be weekly right there. Coming to the top of that, find some support here and then roll over and come back down again. You want to see it leave this chunk open here. It could come down as far as, or come up to these equal lows here as well, which is also the midpoint of this breaker. We're coming into the body of it now. So we're hitting the top of the daily fair value gap there. Let's get down into, let me just get that thing out of the way there. Get the fib tool out of the way. Here's the top of the price action we just mentioned. Yesterday's closing price. Watch for that to provide some sensitivity. We're coming back to fill in that gap that was created on the open this morning. Or yesterday, I should say. Today. Earlier. The new day. What else we got? Gold here. Change these dates again. We're on the 26th though. Gold is certainly taking people for a run here. We've cleared out the liquidity above the markets here into this weekly fair value gap and a daily SIBI. We hit the edge of the daily SIBI perfectly right there yesterday or today, and now we're coming back into this little range here. So we're between that guy and this guy. So this SIBI here, or BISI here, and a SIBI here. Bottom, top. So if we return to here, get some strength, and then run back up to that, are we gonna start to eat through it now? Japanese yen CAD, it's finally worked its way into the fair value gap. Wow, we called that last week, right on the money, and then it's pulling down. So it looks like it's found a little bit of support here right now. So we're just sitting inside that fair value gap. You want to see it kick out of there on the daily. Find some support here and start pushing back for these equal highs. And this small, is there a little small? Yeah, it's a little tiny. So this guy's low here is 110.435, and this guy here is high was 110.36.1. $43.5, 36. So there's a small little tiny piece in there. But look for, even then it would be this midpoint of this candle here, the threshold of that breaker right there would be your up close objective. So look in here for some support off of here and then run for threshold equal highs on Japanese yen and Canadian dollar. Not that that's an exotic that everybody's just dying to trade. British pound. So yeah, upside to here, order block. We have this breaker right here. I want to see us just to return to the bottom of that, leave that open. There's a small little price imbalance in there. Let's look at the hourly. That's a small price imbalance. On the daily that you're seeing right there. So look for price to push up into here. If this doesn't stay open, I'm looking for a push up into here. At least the bottom of it and the top. We have an hourly price imbalance right here. Sorry, SIBI right here. Sell side imbalance, buy side inefficiency. Not your week, yeah, not mine either. It's been, to be honest, it's been quite choppy and really hard. It's not running smoothly to each price point, even though Michael's killing it out there right now. He's been quite the aggression, quite the emotional state with these guys trying to call him out, dropping all their money on tables and trying to sucker him into a challenge. I think that's hilarious, that guy who's trying to, he's like, yeah, here's an account. You trade this account, you can keep all the money. It's like, what? You're marrying the account. You want him to make you more money? That's ridiculous. Go to the Robbins Cup and hash it out there. It's all regulated by a third person. He's not going to get tempted by your stupid little rupees and whatever other shit you've got sitting on the table there. Yeah, that guy's loaded. He doesn't care about your stupid money or your challenge. Go to the place where you can make it happen. Go to the octagon, man. Don't sit there and have some backyard brawl. That's ridiculous. You want to fight the champ? Go to the Robbins Cup and fight it out there. It's third party. Nobody else has any other vested interest in it. So it's ridiculous how some people, if they can tempt him into trading an account, and they either mirror the account, then they make a ton of money off of it. Like, he's not stupid. He knows what you're after. So, and you wouldn't be the first person to call him out either. And he shows on this daily, he was like 40K there yesterday or the day before he made. brilliant. Absolutely brilliant. So look for this price up here. We're 20 minutes away from our price. I'm trying to look for the good trade today. Look for that little fair value gap above on the daily. Euro. Looking for a drive into this wick here. Let me get this thing. Oh. Aussie. Look for a turn back into the fair value gap inversion here. The whole bottom half has been worked. Now you want to see it get up into this here and start working the top half of it, or run through it, get some support, and start to climb up in price. But as the American dollar continues to climb up, it'll keep more pressure on these guys to stay down below this inversion fair value gap, I believe. Coming back to fill the order block here. So we should get a little roll over and head back down. Back into the fair value gap. Oil. Yeah, we've got pockets of liquidity up here, SIBIs. But we ran the low out there, so not super confident that this is going to have a big return to here right away. I want to see something on the hourly that gets through this fair value gap here. We get on top of it and start running back up again. Natural gas. Go, baby, go. We're working that inside of that equal highs here now on the day. Looking for further upside, filling that last little portion of the gap between yesterday's close and today's open. This might actually be the trade for today. This one's already closed in already. So there's more weakness on the S&P right now than there is on tech. See that's your SMT. We have a fill versus no fill. So we have equal highs. So this has got more weakness here. More strength here. Now as this starts to degrade down, now that we filled that imbalance, does this just roll over and start heading back down now? So the question is, do you take the stronger of the two to go higher or weaker of the two to go lower? Good morning, Derek. How are you this fine morning? Kevin's doing some body maintenance and car maintenance today. So look for this to come up here and fill here, and if this just degrades from here. Like if it runs up to this close, which is this low here, it's lined up to the same low. If we run up to here and then bust it and come back down, we're looking for one of those hourly breaks in structure. And there won't be a break in structure till way down here. Tech, we've got this on now, so we'll see if this, we'll get this back to the 5 minute, because that's where we want to find out whether or not our bot works. It looked great there yesterday after we left. We're in all this consolidation, then all of a sudden it busted into a little fair value gap right in here, came back up, filled it. So there was one there, it started, and then another one here, another one here, another one here. So the bot would have picked these ones up and ran on them, would have ran on all that, would have ran, well, that didn't even come back to here, so it would have been closed out long before then. It would have got that one there as well. So it would have taken a whole bunch of these fair value gaps after we left yesterday, but I turned it off at 1800, so I didn't get an opportunity to get in there. So we'll see what it's like this morning, see if we get anything from 17 to 1800. So we've got another 5 minutes or so before, or another 10 minutes, and then we'll see. Let's run into that SIBI we talked about. Right into the midpoint of that SIBI. I'm peeling away. So do we return into here because we've broken some structure? Do we return into the edge of this? So I'm kind of looking for price to come down into here on the British pound and then trade that back up and into this SIBI and reach for these old highs here if we've got a reversal. On the daily, what's our bias again? Our bias is to the upside, back into that breaker there. We haven't quite hit it yet, so we're getting just above that into that fair value gap there. Well, not really a fair value gap because this hasn't finished forming yet. So we're looking to come back and rebalance price. It's been pretty tight here, so it makes sense that it would come back into at least the bodies of these candles. And that little fair value gap on the hourly. Now if we get just a dip down for the next after the 10 o'clock hour, I don't want to see this high get run out beforehand. I just see it just slowly peter out down to here, open, come into that little inversion fair value gap that's sitting right there, tag it, and start to go. So I'm looking right here. So it came down, tagged it already. Tag it one more time or just dip into it. And then look for a run up. Markets caught me this morning a couple of times in recovery mode. Yeah, it could be still pretty bullish or bearish, I should say, all the way down. Let's start drilling down into these here. Well, it ran the lows out here, created a little pocket here. So you want to see it come down, do the same thing here. Just tap that, leave that open, or at least if it's going to fill it, stop loss to go down here and start driving for equal highs, this fair value gap up here, and eventually these equal highs. But if you just take that range, I want to see it get even if this inversion fair value gap kind of holds price, because we've dipped into 50% of that range there, I bet. If you take this here and take the high to the low before the dip down, look at that, 50%, right on the money. Can't get more accurate than that. So you break out above the consolidation, return to the top or the middle of the consolidations. Well, there's 50%. There's your price right there, right on the money. So yeah. See, the British pound is the stronger of the two. Consolidation, we did not come back to the consolidation. So if you're looking at comparing the two, this one is the sixth sister, as it were. It came down to 50% of that range. We didn't get a huge pop up above it versus the British pound. We got a much bigger run up into that liquidity area. So look for this liquidity area up here versus this one. Big run up there already. So the British pound has got the strength in it right now, and we have this fair value gap beginning to form here, this BISI. We've had support at that inversion fair value gap versus this inversion fair value gap. We've gone through it all the way through the body of it. Let me just make sure we draw it out there so you can see it. So kind of look at the perspective from here to here. Now compare the two. See the difference? Oh, unless I'm highlighting the wrong one. So see the small one right here, right just above the consolidation. Look for that on British pound right here. This is inside the consolidation though, and this one is just outside. So no, if this is the same one as this, changes the story, but I don't think so. I think this one is the one that's just above the fair value gap, or the consolidation just above it. So smaller, tighter, more open, more clean. So we'll see what the next 5 minutes has in store for us. So I'm looking for an opportunity to go up in here. That's just a choppy mess. That finally hit the order block as we were talking right there. Now we're looking for it to degrade and come back down. Still want oil to run back up above these highs here. got to get above this imbalance here to get me super excited about this again. I don't want to see that just roll over and come back down again now. I just want to see this push up above this high, create that little fair value gap, get some more support, and break that candle here. Start pushing for higher prices. Consolidation, return to the top of it, leave that open now, or at least the bottom of the fair value gap. Daily. Which looks like where we're headed. Bang, right there. Now, are we filling this thing or are we reacting off of here? So this is the point where we're looking to react off of that, leave that open. I want to see it break this high here now. Drive right through this thing, break the high, create a little fair value gap, and then so we get a breaking structure to the upside. It's key enough of a low a level of support. We're looking at there on the hourly. Let's go back to that again. If we want this to stay open and we want to start running back up into this area here, then we want to see this hold price looking for a breaking structure to the upside to support an upward run. This bot turns on in about 15 minutes or 10 minutes. I'm going to make sure that's set. Oh, it's not even on. Stand by. Yeah, it's not even on. Oh, trading inputs. We're going to go to 20. All right, goes on. We'll let that do the thing. Now, where are we going back to? Let's go back to that hour there and see what's going on. So we're dug into here. So look for 50% of this range. We're stopping on 50%. We hit 62%. That does not bode well for me. So I move to the sidelines and wait. That's not a typical setup for me, so this could just be running straight back down again. Just ran back up into just tapping out the high of the day that was created today. Just clean that out, and now we're looking for a run back down. So all bets are off until we see something happening at 10 o'clock. Oh, it's 10:02 right now. Okay. Oh, we took some trades. Oh, the bot took some trades. We're going to turn this guy off. I'm not set up for him. Close those out. I'm going to make a note of that. Got a big book here. I keep all my notes in the end for anything bot related. That's 1700 silver bullet if you're going to go short, but I like to wait. I like to wait on that one. It's in a discount range here. We haven't really broken any downside structure yet. So that's what we're looking for. I was talking about earlier. I want to see this come down into here. So here's our looky-loo to go along. We want to get into this little pocket right here, fill that up. So on the 1 minute, you want to see that just pop into here, clean this out. You can either take the trade right off of that if you want to predict the low, or this guy here still inside that inversion, or wait for the little dip below the lows and then start getting in on the run back. Once a fair value gap is formed, trade into it and then go. I'm thinking that London low is looking like tasty liquidity this morning. Yeah, Yeah, I agreed. I think that's all this stuff down in here. Equal lows. All that down there. That's the low in London. Okay. $14,257 on NASDAQ, you said? Haven't quite run these lows out yet. Hourly, if we hit anything on the hourly. So we don't want to see it. We want to see it come all the way down and tag that new week opening gap. Sorry. Weekly inversion fair value gap. Unless it's just, no, it's not. It's just a weekly fair value gap that's busy here, that's left open. It's not inversion yet. We're just looking for a level of support off of that. So you're looking for a price to run out down here. Let's run them out now. Now, as soon as that 1 minute kicks in, those open up. Yep, the bot takes them. Takes that as the fair value gap now. We'll let that carry on, do its thing. We have a little dip below these lows now. We're looking for that little. We're looking for it running here. It did hit the top of this here. Why the hell did they all close out? Trading it out on another time frame. We have a failure of the bot. It actually did exactly what we wanted it to do. Traded back into those, found them, traded back into them. Now it's trading away. I might have this set for 1 minute instead of the 5 minute. We'll go wah, 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 on that one. So that was the nice one right there, Derek. The continuation on the sell side. That was your opening for 5 minutes. I think that was the 5 minute opening. Oh, I have it set for 5 minutes and oh damn it. I'm gonna leave this on the 5 minute, not the 1 minute. Jeepers creepers. Try that again. So just a couple of pipettes below that low. So this is what I'm looking for, run into here now, create that fair value gap which we talked about. So it is forming exactly what we talked about. We wanted to get back down into here. Anywhere inside that yellow is a potential entry, so it hit it right off of it, create a fair value gap. Now you can get long in here. And I will put my stop loss below that low right there. Swing high, broke it, fair value gap, return, fill. Would allow it to dip. I don't want it. I really don't want to see it get back down in there. I'll say just tap this thing and go. This will be the one and only trade for the day. If this goes bad, I don't want to see that threshold give way now. Body's already through it. My rule is out. We have a body traded below here. So I'm out. I wanted to see that whole price. A wick I would allow, but a body, no. I'm out. So we could still get more downside. So the next thing is kind of look for this inversion fair value gap here on the hourly. I think that's the hourly. Yeah, to provide support. Now that we're just running below that low, we're looking for either a run back up. If we start to degrade all the way through this, all the way back into here, then it loses its bullishness, as it were. It's returned to a good premium array already. So if we'll lose bullishness if we cut through the midpoint and we start to work through the bottom, aiming back to here, a fill threshold. It loses all its kind of luster if this doesn't stay open, for me anyway. Dixie seems to have some highs, the London high that it might be interested in. So we'll see how this inversion fair value gap holds price, or are we just going to degrade, take these out here. Go back to my whole idea again of I like to see bodies break these intermittent or these little recent highs, not wicks. Wicks, this was just proof that the wicks did not provide the strength that I was looking for. I like to see a body break that. So this was just another run into the midpoint of that inversion. So we had the top, didn't make anything with it. Middle, do we just run back into this order block here? peel over, come back down, find the bottom, work back up to this breaker, and then run for these lows. So it's kind of like up, down, up, and then down. Oh, we got somebody new in the house today. Welcome, whoever you are, mystery person. You can pop in on the sideline, say hello. If not, that's fine too. But welcome. We have this fair value gap that has been filled. There's a little tiny one down in here now. Still looking for it to return up to here first and then come back down to here. Or inside that, oh, it was right there. Inversion fair value gap now, came back up to the edge of it. Come up to the top of it, which is the breaker. Come back through it, come back up to that breaker, and continue down. So they just popped into it. This one right here. Lordstrom Smith. Hello, Mr. Smith. Mr. Smith, we have somebody new. Say hi, guys. Currently monitoring ES and NASDAQ. Let's look at ES and NASDAQ here. ES is a bit of a shit show on the 1 minute. NASDAQ in a nice little steady decline. Look for this busy fill here. Hourly, where are we sitting on the hourly? Yeah, so this could be just a fill off. So keep an eye on the midpoint of this wick here. So 25%, you want to see weakness from here and start to run back up. If we lose the midpoint of that, we're looking further downside. We're looking for a big dip into that weekly fair value gap now that we've run back up, taken out the imbalance or the gap that was here. We've filled that in. Now we're looking for a drive down into this weekly fair value gap. So look on the 5 minute. What do we got here? There's really been nothing to order block here. Break down, come back up into the wick. 25% of that wick, weakness. Come back up into rejection block. Well through that breaker. And then we come back, we're trading back into this breaker right here. Multiple times. So we get weakness here and just roll over and keep coming back down. I'm looking for this breaker to either lose and give way. We're looking for a fair value gap to form after here. So if we can get into something here to go short, you'd have to get below this BISI here first. So there's the weakness. So that breaker's holding price. We've come back up inside it, come back up inside it again, one more time inside it. So you see how it's just losing, this is holding price below it. We have a couple of bissies. That could be the run on liquidity, order block, or breaker down here, last down close candle before a run above these old highs here. So we're coming right to the edge of this. See that? Right to the edge of the bissy. Oops. So compare the two. That's S&P 500 on the 1 minute. This is the NASDAQ. See the difference? Tighter, not really moving. Slowly degrading down into our 5 minute fair value gap. It's eating our way in there now. So we've come down to the bottom of it and driving through. So 1 minute. What do we got over here? There's a little bit of popcorn down in here. Little kernels of price action there. Little pop down in here. Let's make this a little smaller. Yeah, I can't fit it all in the screen. Oops. Once again, my bot is on the 1 minute instead of the 5 minute it's supposed to be on. I'll leave that last one on and put it back on the 5 minute again. So now that we've eaten through this, does this provide a level of support? Or if we just fill the fair value gap here back to the order block, see how we've hit the order block perfectly here? This inversion fair value gap provide us a level of support for continuation on the downside. If we're going to dig into that weekly fair value gap below price, we should see it slowly degrade down here. Or look for logical levels of places that would provide support. It's going to come up there and clean out my 1 minute stop loss. That's out. We're going to turn the sucker off now. Oops. So, is there a 1 minute? Break in structure, support. We're reversing to go higher now. That was the 5 minute fill on the order block below. Looking for that fair value gap to form in here. There's a little one down here. There's the formation of the fair value gap. Now you want to see this stay open here and start to run back up. And look for 62% puts us right on the low here. So my eye goes here. If you're going into this one, stop loss here. I'm not doing any more trades, so I'm just kind of paper trading this one as a trade right here. Objective here. Scale out as you go up. Make sure to put our stop loss down here. Not a lot of, it's 28. for 50, so almost a 2 to 1. Yeah, I don't want to see all that. Let's be on the midpoint already. That would be the 3-point entry. 1, 2, 3 for more leverage. ES looks stronger, waiting for indications to go long there on the 1 minute. You're already through this guy here with a body. So you want to see it get back into here. Just tap that. You don't want to see that close in. So that's right back to the order block. Here at the midpoint. Is that the 50% of that range? %50 of the consolidated range. So that would be your, if that would be the line in the sand, that would be the entry. You wouldn't want to see it start dipping down below that, like that. So yeah, this would be neither one of those are good right now. We'll come back and retest this 5-minute fair value gap high. We've already eaten through that already, so tiny price imbalance down here. We've hit the top of it already. Look for it to tap the bottom of the fair value gap. Inversion now on the 5-minute. We'll get rid of all this stuff because that would have been losses now. It seems like it's running to these much deeper arrays, like not just coming back, tagging a little piece and then getting strong to go back up. It's like running from the top right to discount all the way back up to premium again, and not running those discount premium ranges in the previous range. All you're looking for is this deep discount all the way up to a high premium, deep discount, high premium again, discount, high premium. See how it just comes all the way back up into these really high. They're not like 50%ers. We've swung all the way down into a, let's look at this. Take this range from here. Optimum trade entries. 70%, 75% is right on the money here. So we're into a 62% drive through. There's that little pocket there. Boom. Clean that up right there. 79% right on the money, and fill of that fair value gap to the pip right there. Now do we find support here and start to run back up? To me, that's the, what else have you got left? If you're going bullish, there's your line in the sand. If you're not, you're going to eat right through that fair value gap now and start pushing for lower prices. Eat right through that 5-minute one, because we were calling for downside on tech anyway. We're looking to run into this weekly fair value gap that we mentioned earlier. We're looking to run into here now. So I expect that this 1 minute, as we're seeing now, is going to get eaten through. Yeah, I don't know if I would go long. Eating through that here now. See, there's your fair value gap. Busy. The body ate through it. We come back up, find support at it. One more time, little tiny fill of that fair value gap there, inside that. Find support, push through this one now. We've got a body through that. We've come back, find some support to roll over and come back down now. We've already come back, we've already touched the bottom of it. Now, again, you're losing strength if you're not just tapping it and leaving. The fact that we're slowly eating our way through it, and we have a downside objective. This is just a opening kind of Judas swing. Clean out these trailing stop losses that are coming down behind it for continuation on the downside. Agree with you, I noticed the same. Looks like to go really deep into the last fair value gap before doing something else. Yeah, here we go. Now we just took out the bottoms again. See how he just does this little, it's so grinding, high resistance. Liquidity runs really high resistance, just banging around, slowly degrading down. Obviously, we're still looking for the further downside. So now you're looking for this thing to provide a level of support inside this fair value gap here. Look at that. So we want to see this whole fair value gap inversion here. Provide support right there, did. Now we're looking for a continuation on the downside. Now what do we got here on the hourly? We can reach for this old low back here at 14.17.2. For me, for you guys, it's going to be some other wackadoodle number if you're on TradingView. 14.17.2. We got a ways to go yet. We can come all the way back up to the top there. Watch the body here. Does the body provide support? The wicks can do some damage. We want the body to stop on here. Beautiful. So it just came back up inside. If it does wicks do that, I want the body to stop here in order to keep this bearish. So if it does run up again, those mohawks are fine. We've run the low here now, so do we have another one of those back into this range? 50% of that range. Stuff going on here. What's there? That's this inversion fair value gap again. So the mohawk, see how it stopped there? That's what I'm looking for. It's stopping on that. That's fine. Mohawk can do the damage. Exactly what we just called that. So now you want to see it start driving down if it's bearish. If not, we're looking for a run back up into this guy here. Does he provide a level of support? Because we're coming into a premium discount. So we've run all the way up here, clean these guys out. Go to these guys here. Now we're running back up into the 50% of this range that we just talked about here. which is also the inversion fair value gap right there. And that can run all the way back. Not that you want it to come all the way back up into here. A simple tagging of that right there is fine. Right at 50%. Now you can go down. It's like we're telling it what to do, hey? So now we've come back to this order block right here. See that? High, open, tag that PD array. Now we can run all the way back up again. And we're inside. This is the last up close candle. Right? We've now broken this low. So this up close candle becomes the breaker. We broke the low. So this breaker here has got to provide a level of support no more than this. If I lose that, then we're going back up into this whole crappy stuff still sitting up here. Look at this stuff up here. If we lose this inversion fair value gap, then again, here's where you can get beat up in high resistance liquidity runs. I'm just trying to identify for you guys the PD arrays that I can see. So here's that 50% of that range. That's the line in the stand, or this is also known as the threshold of the mean threshold of that breaker, which would be around 70% optimum trade entry to go short. So we've gone from discount to premium, all the way down, cleaned out the discount side again, running all the way back up into 62% optimum trade entry, 75 or 70% mid threshold. Now do we bounce off that and start driving back down? Because you'll start to see this compression starting to happen where you start to run out of PD arrays, as it were, and then start to expand either higher or lower. Just want to make sure I got the midpoint of that thing properly. Yeah, 50% of it's right there. Right through it. Okay. So we'll see where it closes. Not a good sound when you start to drive through it like that. You already drove through it. You have bodies already through this already, so we're looking for more upside now. It was neat how it hit the midpoint. Look at this. How it hit the 50% of this. When it got up in here, hit the 50%, came all the way back down to this array right here before running back up. So anything above 50% of that range, premium, all the way back to discount again, all the way back up to premium. Beautiful. So now we're looking for rejection block, equal highs up here. There is some choppy movement here for sure. Now we could just get the rejection block here and roll over and create more liquidity up high. So there's the rejection block. Equal highs. Push through. Good. So it's taking out the highs. Going for the highs. Yes, Lauren. Was it Lauriston? 14,345. I think it's going. You're looking up here now. Midpoint. Now you want to see this breaker provide some level of support if you're going to continue higher. Just leaving my crosshairs there and this little inversion here. See how it provides a little area of sensitivity? Will it last? Who knows? But just looking at that little area, a little pocket right there. You also have a fair value gap, SIBI here. So now do we come back to this breaker, provide a level of support inside of fair value gap for continuation on the upside? Or does this just create more drama and come all the way back down again? So just hit the top of that now. Pop through it. You're looking for here and here. Did you get in on this one, Lauriston? Did you take the run out of the low here? Look at this here. This is when you get to see the magic. That's the fair value gap. We ate through it, came back, found support at it, continued down to take out the lows. We went up, we went through it with a body, and look at this, opened up, came back, tagged it beautifully right there, and then left. Oh good, I'm glad you're in that. Good for you. Mitigation. Hold low. See right here, body gets through it. Look where this came back to, right there. And I'll draw that all the way across to here. We got through it with a body, came back, found support at it. looking for higher prices. This is a mitigation block, last down close candle that does not get above old highs, so that's mitigation. Now we've hit the almost the midpoint of that mitigation block. Inside this breaker here, actually got above the highs. Now usually you add these together. There's one big, there'll be 1, 2, 3, 4, 5 minute breaker. We're inside this guy here now. Got stopped out long before the low was taken though. Okay. Looking at the low of the wick on the hourly time frame. Then that did not get run. Then had a bullish breaker structure on the 5 minute. Yes, I took it. Got stopped out long before the low was taken though. Okay. Oh yeah, you were trying to go long here. In this area here somewhere. You wanted to go long. Low resistance liquidity. Failure swing above. Yeah, we just popped into that. Just by a couple of pipettes, popped into this fair value gap here. We're inside that breaker right there. On the 1 minute. We're inside mitigation. Looking at here. There's another one inside here. Another one inside here. So we've got these pockets of resistance to go through. If this is just a draw up and then a run back down, it's a big retracement. What are we looking at on the hourly though? So looking for the midpoint of this hour to close here. We could run back up into the opening of the day here. Got 5 more minutes. You want to see that hourly candle close below the threshold there of this candle right here. Order block. Body, threshold. You want to see it get below this candle here now. Tagging the body again. We haven't got below off this one. We want to get below here now. A little messy for me today. I'm skipping out. Take care, and thanks for the sharing of your work, Darren. Hey, no problem at all. It's my pleasure, Derek. Thanks for popping in. It's nice to have people just to kind of share some ideas with. And you, my friend, I appreciate all your input as well. So you have a great day, and wish you all the best. Have a great weekend, and we'll see you again on Monday. All right, so now we broke that low off that order block. I want to see this stay open now. See it push through here. Let's take this stuff here. That's the fair value gap. Good. Pop up into it. Now drive down. I kind of want to see this stay open here now. That's just a little break in structure. Fair value gap. Just pop into it and start driving down. We want to see it break through here now. Broke the low. You come to the midpoint of that, which is the bottom of this candle. Leave the rest open. And continue down. It's like you're telling it what to do. It's funny. Anyway, so I want to see that stay open there. Now we've allowed for the midpoint to get hit. If it does come back through it, then it loses less strength for me to go lower, but it still can, because it's just coming back to rebalance the price. But if you want to create this as a breakaway gap, you want to see it stay open now, and you want to see it start driving through this fair value gap below. Don't forget, we still have this big breaker here. So you want to see it eat through this sucker like some legs, drive down and below it, still find some support at it now for it to become an inversion fair value gap, and then continue pushing down for prices. Just like that. I love it when it behaves itself and does what it's told. Do what you're told. Stay open. Come back to here. Drive through here. Breaker. Body hits it. Wicks do some damage. Body staying inside that. Now I want to see this start to really open up. Create another opening here. Open. Tapped it, drive down. See, now this to me is a lot cleaner price action. Probably just because I'm calling it. But it seems cleaner to me in terms of how to call it, what I expect to see, and it's doing exactly what we expect it to do. So, yeah. Continue pushing through here now. If you really got intentions of going down, that's the leg you want to get some support off of. I don't want to see it come all the way back through there. I want to see this one stay open as well, or at least the midpoint of it anyway. Are you gone as well, Lauriston? Or are you still with me? I got one person. I don't know if that's Kevin or Lauriston still there. Or another stranger. There we go. Push through here now. Found support right at that fair value gap. Perfect. Body, return to it. It's doing exactly what we want it to do. Drive through here now. Lovely, lovely. Now you look for this to become the inversion for more support, to drive prices further down for these relative equal lows. We want a body to get through here. Still here. Went short. Oh, you did. Good for you. So we had a body get through that. That's good. Come back, find a measure of support inside here and in here. Now here's the resistance. The resistance. You got to break through all this stuff here now, this mess chop. So now we found some support here. You want to continue down. Are you holding a big pull, or are you breaking out? Like, are you taking pieces off at these fair value gaps, or are you just holding her for a big run down? Full pull down there. This would have been a nice, that one we were calling back here would have been a really nice entry. Look at that, right at the end, right at this fair value gaps inversion here. Watch, look at that. Bang. Right on the money. Now we are deep into the discount of this little range that was created here. So always kind of keep this in mind as well. Big retracement back into here. So if our overall objective is to still go lower into that weekly fair value gap, this was like a Judas pump back, kind of clean out a lot of the liquidity that's trailing down behind here, back to an area of a SIBI fair value gap, just enough to pop above it. This high here is 298.25, and the high here is 299, big figure, 00. So that was just enough to creep up into that fair value gap. That's all it needed, and then start to break down. We have a break-in structure here. You start to see that there's a fair value gap in here. We want to see it stay open, create a breakaway gap. Came up, just tagged the inside. So we have three different places we go. There's the low, the middle, and the high. We got the low and almost the middle of that, just a little bit short, and then continued on the downside. Then we're looking for it to break through these fair value gaps. It did, we called that. And we wanted to break through this one. It did, we called that. And now we're looking for this to provide a level of support to continue down into this inversion fair value gap down in here. It's got a lot of chop to get through now, so you might see price getting kind of choppy. Keeping in mind this could be just a deep discount here for another big run back up. That's why I'm not in this today. It's a bit of dog's breakfast. Took the inversion gap you mentioned, 50% of your position. Good for you. So you want to see that. Not a good sign to see it come all the way back up like that. As you can see, now we're looking at this guy here. So we're already through it. It's not the kind of thing I want to see. I just want to see here or midpoint when it starts getting up in that. When it starts to blow through it, then it's just exactly what I talked about here. This could be just a nice big deep discount for a run back up one more time into this area here. So the whole process starts all over again now. So now this is now the inversion on the downside. We've now wicked through it. So we'll see where the body ends up closing. We want to see the body close below here. Kind of like when we were talking about one of these. We were talking about wanting to see it close below. Oh, it might have been over here. It had to close below a certain point for us to stay short on it. There's your wick doing the damage. Now that's just a quick whip back into rebalance price and either drive down really hard, or now we're back into this order block here. So with the high, the body, open, threshold. These are just kind of the immediate PD arrays I'm looking at, not that I'm expecting support there. Good. I want to see it drive through here now, take out these lows and start driving into this lower inversion fair value gap down here. Keeping in mind wicks did the damage, body staying inside our inversion. Now we've got this candle here. We've got below it. So it's created another fair value gap here. I'd like to see the body get below this first, then come back into here, keep this open, push down further. See if this works out. So far we're calling it pretty close, pretty accurate. There we go. Now we're digging into that inversion fair value gap. I like that. Just want to see this stay open now. Next candle opens up, comes back into here. Find a little tippy tappy like that. Good. A little tippy tappy now. There's a little tiny gap in here, so maybe it would run back up to the inversion. Tap it once, come back away. I want to see it stay open. To find more strength on the downside, I see that stay open and just drive through. We're well below our 79% retracement now, so I'm definitely more weaker on this one. So you see how when we looked at this one, it was a big bold candle going back up. Inside that fair value gap there was a balance. So if that closed above here, I lose. That's where I get out. But wicks do the damage. Body stays well within inside that inversion fair value gap we're looking for. This was just a rebalance of this piece here. We're looking for this to stay open. It is. Now we're looking for rejection blocks. Bottom of the fair value gap. Inversion. Create that support here and start going down. I don't want to see it come back up into there now. It's got to break this low here before I worry about that. It can still come back into the edge here. Break this low. I want to see that stay open then. We'll put that here. It's gone, LOL. Do you do your analysis, Huddleston, with that kind of detail where you start looking at PD arrays, little tiny, the bottom, the middle of the threshold, and you wait for it to provide a level of support before you start to, like, does your detail get that? Or are you more of a global view where you start to see specific areas higher up? Or do you chop it up like this into smaller details? Now we're breaking through exactly what we're looking for. That's good. So now we've got a wick through. We want to see a body close. There we go. I want to see a body starting to get down below here now. Thinking the SSL on the daily kind of far-fetched, but what do you think? Sell side liquidity on the daily 24. There's a little heart stuck in the way there. I can't quite see. Hang on a second. On the 24th. Okay. Let's have a look. On the 24th. You were talking the tech, right? No, don't look at that detail. Ranges of higher time frames, PD arrays. Okay. Back here, we've already run these, so we're digging into this fair value gap on the higher time frame right now. So we're definitely getting into this weekly fair value gap. We're digging down into that. We're also into this daily fair value gap right here. So look for the midpoint to get hit first before you start looking at the last 25 to 50% of the daily, and look at the 50% on the, you got to look for, well, you know this, 50% of this, 25% of this, and 25, 50, 75% of that. So there's lots of little individual PDRA areas that you can reach for. It's how big and aggressive you want to hold it, I suppose. This 24th, I think this is the one, 26th, this lower time frame one here at 10:26 on the 26th, I should say. So today at 10 o'clock, the London low, we could be reaching for that London low right now. We're still inside that inversion. We did some wicks into some damage, but didn't do any, didn't break the low. So we have this, all this liquidity sitting below here. We got into the rejection block. So look for this to provide support. Higher time frame is on ES 24th. Okay, you're looking at this one. This one down here. Oh, it's 26th. Let me go to here hourly. Let's go to the daily 4 hour here. You're looking for the 24th of May. This one. Yeah, it's a bit of a stretch. I would say this little piece right in here first. If we haven't already tagged it, 41.56. And then those equal lows. Then the threshold hasn't been hit yet. Inversion at 41.52. Where are we sitting right now? 41.53. So we definitely dug into that little fair value gap we mentioned way back there. We dug into this 41.55, 41.53 we said we got to. So yeah, that one's been eaten up already. So we're inside that guy. 41.52.67. So look for this inversion here to give way on the daily or the 4 hour. Yeah, this is a whole candy land down here. So not only is there 24th, I agree with your 24th, I'm looking at all the way back through here. This whole pocket of liquidity looks super tasty. There's a little pocket down in here that hasn't been filled back in May 5th on the 4 hour. Also, we're getting to the bottom of that weekly fair value gap again. Or the top of the fair value gap on the weekly. There's a little pocket down there. So, looking for this to run out here. We got this pocket down in here. So, right now we're looking for the liquidity down in here. And then here. And then eventually down in here if it starts to really degrade. That means I would want to see this provide a level of support for us to continue down on the downside. Make sure I got my right days on there. Choppy chop. But the 1 minute is functioning the way it's supposed to. bodies of the candles are respecting this inversion here. Price imbalance. Came back up into it, hit it perfectly here. Degrade down. Want to lose the threshold here. Run for the rejection block and then further downside. Yep, the low is 24th of May. Yes, very tasty. It's Candyland. Lauriston, it's Candyland back there. So now we're working off of this inversion fair value gap here on the 1 minute. There we go. Start working your way through. Geez, we called this from all the way up here. Would have been nice to be in that, but I got beat up once or twice in there, so nope. This is when I see these massive long runs that I'm not in. But I was calling them the whole time, all the way down. That's good. Now we've broken the lows. Bro, I'll be looking at your lives going forward. I'm not good at blending over time frame arrays with higher time frame ones. You're good at that. Well, thank you very much, sir. Appreciate your kind words. I don't mind sharing as much as I can. I'm not here to sell anything. I'm just here. This is my, as I've told the other guys, this is more of my daily diary. It's like a video diary for me. I kind of just look at that. I try to read the PD array to PD array and then kind of get your higher time frame objective. And then if it's supported on the lower time frames smoothly, then you can kind of aim for it. And this was just kind of an explanation of how it works. Really clean, and why those inversion fair value gap. I'm an inversion fair value gap kind of guy. I like the I like dividing those levels of support because I live up here in the mountains in Canada. I look for that. Michael talked about that foothold climbing a mountain thing analogy. It works really well for me. So I like that whole support on the mountain, climbing up, finding support at these little footholds, which I like to call the inversion fair value gaps that Michael mentions. And then the reverse thing, it's like crawling on the wall like a spider on the way down looking for these footholds. So you want to see this now provide a level of support and then continue further down. I got a few more minutes. I want to see this provide a level of support now and continue on down. He's on down the road, looking for lower prices into that weekly fair value gap we mentioned. So it's a good call today. I've enjoyed this session, even though I got kind of beat up in there. Never went live, kind of traded some more demo stuff, got beat up in that, but then it started to really settle in, and it's hitting the arrays quite nicely. So with that, I'm going to wrap it up for the day. Thanks very much for popping in, those of you who did, and welcome Lauriston to our fold. It's an awesome day. And it looks like we're going to continue down for the rest of the day. I love it. We've been calling this right from the top, bang on, all the way down. Yeah. Okay. That's it for me. I'm out for today. And enjoy the rest of the day. I will be back on tomorrow morning. And those of you who are new, thank you very much for popping in. If you liked it, smash the old like button, and I'll be more than happy to see you again tomorrow and share some insights on the market. Friday, again, we had a lot of chop today. It started leveling out and doing some decent displays like it's supposed to, which was nice. And now we'll look at Friday and then into next week and start getting our setups for next week. So Friday we get a retracement back into the week. So let's look at the weekly range here. If we get this run back into the week, I'd like to see it come back into, so now we're hitting the midpoint of this daily fair value gap. I'd like to see it pull back into this price imbalance perhaps. On the weekly range, 30% of that range, we have Friday, Thursday, Friday, sorry, Wednesday, Tuesday, Monday. So here's the weekly range. So if we can pull back into the bottom of this weekly inversion fair value gap now, yes. So if we can come back into that as a close on the week and then look for a drive down into this lower stuff next week, that would be awesome. That's my little I want. I'll put that, oops, let me change my date. I want people to think I'm on the wrong date here. So tomorrow is the 27th and we're looking for a run back into here. And yeah, if you like it, hit the smash the like button and notification bell. I guess that's what they say. I don't know. Anyway, I'll see you guys here tomorrow. Thanks very much and peace out. Be careful. There's a lot of hate out there. You guys got to find a way. If you're rich, you make some money, pay it forward, help some people out along the way. Let's stem the flow of hate out there. Spread the love, man. We're not here for a long time. Let's make it a good time. See you guys tomorrow.